Hi, this is Lara at Elliott Wave Gold with a short video for US oil analysis for you after the session Monday 9th of January has closed. I'll be expecting some downward movement now for oil to at least 28.61. The target I have at this stage is 25.59. Short term, if we see a new low below 49.96, that would add quite a lot of confidence to the idea that oil has just had a trend change and has now turned down. Let's have a look at the monthly wave count, the big picture. We'll do Elliott wave first and then I'll get to some classic technical analysis at the end of this video. The monthly picture for oil, I'm seeing a zigzag unfolding for a super cycle second wave correction. It subdivides 5, 3, 5. So we have a 5-wave structure for cycle C beginning here. It subdivides 1, 2, 3, we need to see 4 complete, and then I'll expect 5 down for the 5th wave. I don't have a target yet for cycle wave C because when I apply Fibonacci ratios to it compared to A, it comes up with a ridiculous negative target. So I'm going to wait until primary 4 is complete, and then I'll use the ratios between 1, 3 and primary 5 to calculate a final target. That's why I don't have one yet. But at least I would expect primary 5 to make a new low at least beyond the end of 3 to avoid a truncation. This channel is a best fit. I've drawn it from 1 to 3 with a copy up here on intermediate wave 2. We've found resistance just a little bit below that. Primary wave 4, if it ends as I expect, may overshoot the channel. We'll see how this one unfolds. Sometimes fourth waves overshoot these channels, but along the way up I will expect some resistance about the upper edge of this channel. This fourth wave may not move into first wave price territory above 74.96. The second wave was a deep zigzag subdividing 5, 3, 5, so we will expect the fourth wave to exhibit alternation in terms of structure and maybe depth. It does look so far like it's going to be a little bit more shallow, but it isn't particularly shallow. It looks like it's unfolding as a flat or a triangle. At this stage it looks more likely to be a flat. I'm seeing this upward movement. You can't see it now on the daily chart, but if you have a look at it, I've tried to see it as a 5-wave impulse, and that's problematic. I think it subdivides best as a 3, a double zigzag. It fits very neatly. If that's right, and this is a double zigzag, then that indicates that primary 4 can't be a combination. I can't relabel this intermediate wave W if it's a double zigzag, because you cannot have multiples within multiples. The maximum number of corrective structures within a multiple for Elliott wave rules is 3. To label W, Y and Z waves themselves multiples increases the maximum beyond 3 and violates the Elliott wave rule. So if this is a double zigzag, then it can only be an A wave, and it's a corrective structure. That indicates for primary 4 that we're looking at either a flat or a triangle. But now we've got a new high beyond the start of A. So if it was a triangle, that doesn't make sense. We can't really have A and B should not have a price extreme beyond the start of A for a triangle. So I've narrowed it down to expecting that primary 4 can't be a combination, doesn't look like a triangle, so it must be a flat correction, and they are very, very common structures. Within a flat correction there's a minimum requirement for the B wave, and it must be a corrective structure. Let's have a look at how this one is unfolding at the daily chart level, with the end of minor B up here is this point up here. So I think intermediate wave B is unfolding itself as a flat correction. Minor wave A within it, which is now off to the left of the chart, fits really neatly as a zigzag. Minor wave B fits nicely as a zigzag, and within it we have an expanded flat here for minute wave B. Minute C is now a 5-wave structure, and it looks like it's complete. Price behaviour around this trend line indicates that it's reasonably likely that we probably have a high in place, and there's some divergence at this high between price and RSI, so there's a bit of weakness to this last piece of upward movement. From this high to this high I can see some divergence. So it looks like we may have a high in place, but while price remains above this confidence point, it must be accepted that my labelling of minor B as over is premature, and it certainly could continue higher. As soon as we see a new low below 49.96, that's this point right here, then downward movement could not be a second wave correction within the final 5th wave, and so at that stage this 5th wave would have to be over. At that stage I would have confidence that we have a high in place and oil is on the next leg down. The minimum requirement for intermediate wave B is a 0.9 length of intermediate A, which you saw on the monthly chart. That minimum is at 28.61. At 25.59, minor wave C will equal 2.618 times the length of minor wave A. The normal range for intermediate B within a flat correction is from 1 to 1.38 the length of intermediate A, giving us this normal range of 2606 to 1633, and the target is right within the normal range, so that's a reasonable target. Minor wave C must subdivide as a 5-wave structure. It should last about 2 or 3 months. I've drawn this tentative resistance line. It's a bit steep and it's only been tested once, so it does not have good technical significance, hence the question mark next to the word resistance. We might look at price finding some resistance there. If it does and it moves down and away from that line, then look out for oil to increase its downward momentum. But if this resistance line is breached and price moves above it, then the first resistance line will have to be redrawn for this new downward movement. Let's have a look at some classic analysis for oil. From this high to this high, I can see some divergence between price and RSI, and so that tells us that for this last piece of upward movement there's a little bit of weakness here. That is not a signal of a trend change, it's just an indication of weakness. Divergence can persist for long periods of time. It can develop into double, triple or even quadruple divergence before price turns. So this is just an indication of weakness that supports the Elliott wave count. It is not definitive. For these last few sessions, we've got this downward day, and this downward day is the strongest volume for downward movement, so there's a little bit of support for the fall in price from volume. Oil doesn't always do that. It does often fall of its own weight, but here it's not. There is some pressure to downward movement that also supports the Elliott wave count and the idea that we may have a trend change up here. We still need that confidence point to be passed in order for reasonable confidence though. The short-term Fibonacci 21-day moving average is above the mid-term 55-day moving average, which is also above the long-term 200-day moving average. But the short-term 21-day moving average today has just started to turn down. That may be the earliest indicator of a trend change. If we have got a trend change, this is very, very early days. ADX today tells us it's possible we may have a trend change. The negative DX line has just crossed above the positive DX line, indicating a possible trend change, but the black ADX line is still declining, telling us that the market may still be consolidating and no new trend is yet indicated. This is a lagging indicator though. It's based on 14-day averages, and so necessarily it will be lagging. ATR has been declining for some time and now might be starting to show some increase. It declined as price was moving higher. Now that's not normal for a healthy, sustainable trend. Usually for a good, strong trend, ATR should be increasing and Bollinger Bands should also be widening, but they weren't, they were contracting. That supports the Elliott wave count. If this is a B wave, there should be something abnormal about it, and there certainly is, with declining ATR and contracting Bollinger Bands, and that divergence at the high with price and RSI. Stochastics reached overbought and is now turning down, getting close to neutral. It also exhibited some divergence with price at the last high, again telling us that there's some weakness in this upward movement. That too supports the Elliott wave count. And so that all looks pretty good, but I would still like to have that confidence point at 49.96 passed before I had reasonable confidence that we're on the next wave down. That's all from me with your update for your oil analysis, and you'll find gold analysis and GDX analysis in the membership area.